Chapter 18, Financial Forecasting. Introduction. Chapter 18 explores the importance of financial forecasting in predicting future financial performance. It emphasizes the significance of ethical behavior in forecasting and highlights the role of financial statements in providing valuable information for forecasting. Learning objectives. By the end of this chapter, you should be able to 1. Explain the importance of financial forecasting and its role in budgeting, investment decisions, and cash flow management. 2. Understand the use of ratios and common size analysis in assessing financial health and relationships between balance sheet items. 3. Identify the components of the income statement and their relevance in forecasting future financial performance. 4. Calculate and interpret various ratios based on the income statement and balance sheet. 5. Apply forecasting techniques, such as the percent of sales method, to predict future sales and expenses. Key points. Financial forecasting is a vital tool for predicting future financial performance and is used for budgeting, investment decisions, and cash flow management. Ethical behavior is crucial in forecasting, as there can be pressure to meet certain profit levels. Financial statements, such as the balance sheet, income statement, and statement of cash flows, provide important information for forecasting. Ratios and common size analysis can be used to assess financial health and relationships between balance sheet items. The income statement analysis helps in understanding past performance and estimating future expenses for a forecast. The percent of sales method is commonly used to forecast expenses based on sales data. Real-world application. A real-world application of financial forecasting is in the retail industry. Retail companies often use forecasting techniques to predict future sales and plan their inventory levels accordingly. Accurate financial forecasting in the retail industry can help companies optimize their operations, minimize costs, and maximize profitability. Conclusion. Chapter 18 delves into the importance of financial forecasting and its various components. By understanding the role of financial statements, ratios, and common size analysis, you can assess the financial health of a company and predict its future performance. The chapter also highlights the significance of ethical behavior in forecasting and provides a real-world application to demonstrate the practical relevance of these concepts. By mastering the techniques and concepts discussed in this chapter, you will be equipped with the knowledge and skills to make informed financial forecasts and contribute to effective financial decision-making.